Hi class, today we will be looking at Chapter 3, Problems 7 through 11. You should be able to see Chapter 3, Problem 7b that I'll be demonstrating today in Excel. What we're going to do in Chapter 3 is we're going to calculate the FICA taxes, which consist of both OASDI taxes and HI taxes. We're going to be the Funk Corporation, and we have only 5 employees who are paid at $1,050 per week. Compute the total FICA taxes that the employer would withhold from the 5 employees each week and the amount the company would pay as its own liability for the employer's share of FICA taxes on the weekly wages of 5 employees. So first of all, we're going to calculate the employee's share of FICA. The employee's share of FICA would be calculated by taking each employee and multiplying it by their weekly pay. So the first employee is subject to the weekly pay of $1,050. Your second employee is also going to be paid just $1,050. So we really don't need this multiplication sign here. We just need to know that the weekly pay is this. So let me take that out of there because I think that would be a little bit confusing for you. And I'll take that equal sign out of there too because I don't think you need that there. Okay, now getting back to employee number 1. There are 5 employees, and the first employee is going to be paid $1,050 per week. So $1,050 is the weekly pay, and all of those earnings are going to be subject to the old age survivors disability insurance, which we tax at a rate of 6.2%. So we're going to take the total pay subject to OASDI and multiply it by the tax rate of 6.2%, which I've converted to a decimal here. And that will give us the amount of OASDI taxes that employee number 1 owes on this weekly pay. The amount that employee 1 owes is $65.10. Because we have 5 employees and they're all paid the same amount, $1,050 weekly, we would simply multiply 1,000 weekly times 6.2%. And so each employee contributed $65.10 to the OASDI taxes. Remember, OASDI taxes are your Social Security taxes, and the HI taxes, which we're going to calculate next, are your Medicare taxes. Again, we're going to calculate the amount of taxes that each of the employees owe for Medicare or HI. Employee number 1 was paid $1,050 weekly, $1,050 weekly. All of that is subject to the HI tax at 1.45%. Notice I've changed it to a decimal point here. So you're simply multiplying again 1,050 times the HI tax rate, and that will give you the HI taxes. And because each employee, each one of these employees, there were 5 of them, they all made the same amount of weekly pay, They all have the same amount of HI taxes deducted from their paycheck. So each one of these employees are going to have $15.23 deducted out of their paycheck. In the second part of this problem, they want you to calculate the employer's total OASDI. And the employer has to put in 6.2%, just like the employee did. But the only difference is we're going to take the total number of employees, which were 5, and multiply it by the weekly pay to get the total pay that was subject to the OASDI taxes. So on the employer's share, you're going to take the total pay for that period for all of the employees and multiply it by 6.2%. The taxes that the employer has to withhold are $325.50. That's because they're withholding on all 5 of these employees. They have to match what each individual employee put in. And you might remember that sometimes, in this case it didn't happen, but sometimes there might be a rounding error for the difference between these two. So your OASDI taxes for each employee, if you add them all together, the total that all the employees contributed to the OASDI taxes is $325.50. And the employer will match that, and the amount should be really close to $325.50. In this case, it is $325.50 because there was no rounding errors that we had to account for. There could be a cent difference or so in the employer's total OASDI and what was actually withheld from the employee because of rounding errors. Remember, with the employers, we take the total pay that's subject, multiply it by 6.2%, and that gives us our OASDI taxes. Whereas for the employees, we're taking each individual employee's pay and multiplying it by 6.2 to get the OASDI taxes. For the employer's HI taxes, again, we're going to take the number of employees that we have and multiply it by the weekly pay to get the total pay that is subject to the HI taxes. Once you have the total pay subject to HI taxes, you're going to multiply it by 1.45%, which I've converted to a decimal here. We multiply the two of these. The total taxes that the employer has to pay for all 5 of the employees is $76.13. And that did get rounded to $76.13. Notice it also matches the total amount that the employees put in, but sometimes there can be a little bit of a rounding difference between these two numbers. But in this case, it matched exactly as it should have. So that's all they wanted you to do in this particular problem. So I'm going to move to our next problem, which is problem 8B. This time, George Parker, that's one employee, was paid a salary of $74,700. And that was the entire salary for the year, 2000 whatever. In addition, during the year, Parker started his own business as a public accountant and reported a net business income of $80,000 on his tax tax return. In this case, Parker, who was subject to a salary that was paid by the Umberger Company, this is subject to OASDI taxes of 6.2%. His employer, Umberger, would pay 6.2%, and so would Parker. Parker would contribute 6.2%, and that would come out of his employees' paychecks or his employees' earnings. But because he also on the side started his own business, his business income is subject to what we call self-employment tax. And self-employment taxes, you're actually, when you're self-employed, the employer and the employee, so your OASDI taxes are double the 6.2% rate. The HI taxes for self-employed are double the HI rate. So in the first part of this problem, they're asking you only to calculate the amount of FICA taxes that was withheld from his earnings by the Umberger Company. He earned $74,700. That $74,700 is under the OASDI ceiling of $137,700. Because he's under the ceiling, all of those wages are going to be subject to OASDI or your Social Security taxes of 6.2%. So $74,700, the salary that he was paid by Umberger, the OASDI rate is 6.2%. They would take 6.2% out of his earnings, which would amount to $4,631.40. We multiply these to get this. The wages that are subject to HI, which is your Medicare portion or your hospitalization insurance, that's what HI stands for. All of these wages are subject to that because, again, they were below the ceiling for FICA taxes, or ceiling for, excuse me, let me rephrase that. There's only a ceiling for OASDI taxes. On your HI taxes, all of the wages earned are subject to HI taxes. And since the wages that he earned for Umberger Company was $74,700, we're going to multiply that by 1.45%, and that will give us $1,083.15. So for A, the wages or the OASDI tax that was subject from the Umberger Company's earnings or wages that were on this George Parker's wages, he has to contribute, George Parker has to contribute $4,631.40. He also has to contribute HI taxes of $1,083.15 on his earnings. In Part B, they're asking for the self-employment taxes. So the self-employment taxes, what you've got to remember in this case, or the trick to Part B, is that there is a ceiling on the amount of taxes that a person will have to pay for OASDI or Social Security taxes. That ceiling is $137,700 for this employee, George Parker. You got to remember that he's already paid taxes on $74,700, and his self-employment earnings were $80,000. The two of these together go over the ceiling for OASDI taxes. So his wages that he earned from the Umberger Company and his self-employment earnings together total more than the cap or the ceiling for OASDI. The ceiling for OASDI is 137,700. We've already let George take 6.2% out of his earnings for the Umberger Company. So his company wages were 74,700, which we've already figured the tax on that. The difference between these two are the wages that are subject to the OASDI self-employment tax. So all of his earnings of 80,000 were not subject to OASDI because he had contributed to his OASDI from his salary in the Umberger Company. So what we had to do is to figure out how much he had left that he could be taxed on for OASDI. And 63,000 of the 80,000 in self-employment earnings that he earned is taxable toward OASDI. Notice the rate for self-employment OASDI taxes is 12.4%. That's because if you're self-employed, you are both the employee and the employer. You have to pay twice the amount of taxes that you would if you were just a regular employee. So 6.2% times 2 is how they come up with the OASDI rate. The OASDI rate is 12.4% because if you're self-employed, you have to pay the employee's share of OASDI taxes as well as the employer's share. You get double whammied here. So 63,000 that we have left in wages that are subject to OASDI are taxed at 12.4%, which is $7,812. So that's the amount of tax that he would owe on this 63,000. The remaining wages that are subject to the OASDI taxes. For his wages from self-employment tax for HI, all wages are subject to the HI tax. So in other words, the net business income of 80,000 is subject to the is subject to the HI taxes. All of those are subject to the self-employment earnings of 80,000, and then we multiply it by twice the HI tax rate, which was 1.45% times 2. The self-employed have to pay 2.9% in HI taxes. So we would multiply 80,000 times 2.9%, and that will give you the HI taxes that would be calculated on the self-employment earnings of $80,000. Now, if the total earnings for this employee for HI had gone above 200,000, which it didn't, the total earnings were 154,700. If they had gone above 200,000, the amount of wages above 200,000 are subject to an extra 0.9% on those wages. And that 0.9% would be doubled because it's self-employment tax. And so it'd be 0.18%. And so that's all I want to talk to you about on this particular problem. So they threw you a couple of curveballs because, first of all, this person was earning a salary, and then they had their own business, which is taxed at self-employment tax. So moving on to the next problem, we're going to be the Haggerty Company, and we're paying our salaried employees monthly on the last day of each month. And the annual salary for this year is as follows. They gave you the annual salary amounts. Notice that there are two employees that go over the OASDI taxable base, and they're going to be Alan Haggerty and Pam Wee. That's why I've got them highlighted, is because they're going to go over the 137,700 OASDI ceiling. And so we'll have to be careful when we're calculating these two employees' taxes. All the other employees' annual salaries are below the ceiling. So they have to pay the 6.2% based on their wages for that period of time. Notice these are monthly wages. So the first thing you have to do is you have to find the amount of the monthly wages that would be taxable for OASDI. We're looking at the OASDI taxable wages, and this is for the month because they're paid monthly. The annual salary would be divided by 12 months, and that will give you the monthly salary of Myra Stern. We'll take that monthly salary and we'll multiply it by 6.2%, and that will give you the OASDI tax that we would withhold on Myra Stern's paycheck. The taxable HI wages, since they are not above $200,000 annually, are the total amount of the monthly wages. The monthly wages were $3,512.50. You would multiply that by 1.45% to get the HI tax. Notice I've rounded the HI tax to dollars and cents. And so the rounded amount was $50.93 that we would withhold from Myra Stern's paycheck for HI taxes. Lundy Howe and Rob Franks would be done in a similar manner. So I'm going to go ahead and show you what would happen to Alan Haggerty because his annual wages are above the ceiling for OASDI. The ceiling for OASDI is $137,700. I've calculated or I've shown you the computations for calculating the amounts to help you with figuring out what the amount of the OASDI taxable wages are, the amount of the OASDI tax that would be withheld, and the HI portion is also to follow right here is where we talked about the HI portion. So first of all, for Alan Haggerty, his annual salary went above the OASDI ceiling of $137,700. What we have to do is we have to find the salary to date. We're going to start by determining the monthly salary. We will take the total salary for the year, the annual salary, and we'll divide it by 12 months, and that will give you the monthly salary. Since we know his salary was above the ceiling, we're going to have to drop back and calculate his salary to date. We drop back one pay period. So in other words, we're going to calculate the monthly salary and use 11 months instead of 12 because we're dropping it back one pay period. Since they were paid monthly, we'll drop it back to 11 months and calculate the salary to date. Notice the salary to date at 11 months is still more than the ceiling. So this monthly salary, there would be no taxable OESDI wages. Since there are no taxable wages, there would be no tax that is withheld from that employee. So there's zero wages for OESDI because his monthly wages for December was above the ceiling at $137,700. In other words, this employee would pay OASDI taxes only on $137,700 of earnings. Because he earned more than that, his monthly earnings were not subject to OASDI. So his taxes are zero for OASDI that we've withheld. For HI, because this 161,280 is not above 200,000, we are going to simply take the monthly salary and multiply it by the HI tax of 1.45%. That will give you 194.88, which is the HI tax that is rounded. For Randy Ward and Al Haskins, they were below the ceiling amount for OASDI. In other words, all of their monthly earnings will be taxed at OASDI rate of 6.2%. All of the monthly earnings will be taxed for HI at $49.30. So Al Haskins is done the same way. He didn't go over the base, just take his monthly earnings and multiply them by the tax rates. For Pam Wee, she did go over the OASDI taxable base. So the computations for Pam Wee are found on this part of the spreadsheet. Again, I would start by finding the salary to date, which is at 12 months, the annual salary was $145,500. We would divide it by 12 months to get the monthly salary. And we want to drop the monthly salary by one pay period and calculate the salary to date. Notice this time, when we calculate 11 months of the salary is under the ceiling of $137,700. So part of the earnings are going to be subject to the tax in the 12th month. And you've got to figure the part of earnings that are subject to the tax. And the way that we do that is we take the ceiling, subtract from it our salary to date at 11 months, and that will give us the amount of wages that are taxable for OASDI. So in your wages that are taxable for OASDI, 4325 is what we record up here as our OASDI taxable wages for this period. We would multiply 4325 times 6.2%, and that's how you get $268.15. And then notice that the taxable wages for HI are the entire monthly amount of the wages. The monthly amount of wages that we calculated was $12,125. This annual salary of $145,500 is not more than $200. So his earnings for the month, $12,125, are subject to the HI taxes of 1.45%. So we would multiply the taxable wages for HI times 0.0145, and that will give us $175.81 rounded. The rest of these employees do not go over the OASDI ceiling. So on these employees, you simply multiply the monthly salary by the OASDI tax rate of 6.2%. And then again, you take the monthly salary and multiply it by the HI tax rate to get the HI taxes for these employees. Now, in the last part of this problem, they want you to calculate the employer's share of OASDI taxes. So what you would have to do is determine the taxable OASDI wages, which would be found by totaling up this column here. So 38,142.50 is where I'm getting the amount here. I'm going to multiply it by 6.2% because our employer has to match what the employee paid in. Remember, when you're calculating the employer's shares, you do it based on the total wages of all the employees multiplied by 6.2%. The amount of employer's share of OASDI taxes is $2,364.84. The employer's share of HI tax, you've got to figure out what the HI taxable wages are. And notice the taxable wages for HI are $59,382.50. So we're going to take that amount and multiply it by 0.0145, which is 1.45%, and that will give you the HI tax that the employer has to match of what was taken out of the employees' paychecks. I'm going to move to the next problem, and in the next problem, we're finding again the OASDI tax and the HI tax. We're going to have to determine the total wages of the full-time employees and the total wages of the part-time employees. So there's two types of employees that we're looking at, full-time and part-time. These are our full-time employees, and this was the monthly amount of the payroll that was given. What you have to determine is how many of those monthly wages are subject to OASDI tax. So the first thing that I would do if I were trying to tackle this problem is look at the monthly payroll, go to the highest payroll, multiply it by 12 months, to see if the highest pay goes over the ceiling. In this case, none of the employees went over the OASDI ceiling of 137,700. So we don't have to worry about going over the ceiling. All of them were under the ceiling. So we're simply multiplying the monthly total of the wages times 6.2%. We're going to take the monthly amount of wages for HI taxes, which is the same amount, and we're going to multiply that by 1.45% to get the HI tax. Remember, there's no ceiling that we have to worry about for OASDI, for HI taxes. However, there is a ceiling for OASDI taxes that we have to watch out for. And this company, none of the employees went over that ceiling, so we simply are multiplying by our tax rates. There are some part-time folks that you have to figure what the monthly payroll is, and you simply do that by multiplying the hours worked times the hourly rate. That'll give you the monthly total payroll. So 180 times 12.5 or $12.50, which is the rate, gives you 2,250 that are the monthly payroll. And all of these are subject to OASDI taxes because none of the employees went over the base or the ceiling at 137,700. So all the wages are subject to OASDI tax. You simply multiply the wages times the 6.2 tax rate, and you do the same thing for HI taxes, multiplying the monthly wages times 1.45%. And you just do that for each of these. They also are asking you for the employer's share. Remember, with the employer's share, we have to find the total taxable wages. And so what I simply did is added up all of this column for a full-time, and then you add the part-time wages to that, and that'll give you total wages that are subject to OASDI of $60,351.50. You would multiply that by the 6.2%, and that gives you $3,741.79 rounded. The employer's HI taxes, none of them went above the 200,000, so they're all the earnings are subject to 1.45%. So the total earnings again for HI taxes is $60,351.50 times 1.45% gives you $875.10 rounded. And that's all I want to talk to you about on the spreadsheet for problems 3.7 through 3.10. Now I want to switch to the next problem, and the reason I didn't put it in Excel format is I couldn't get it copied and pasted in here, because you're going to have to fill out a form for Cengage. That form is on your Cengage problems. So I'm going to stop sharing this for just a minute, and I'm going to put up a new share for the next screen, or the Cengage screen that I want you to look at. So hang tight with me while I try to do this. I'm going to share my screen again. But this time we're going to pick up Cengage. And so now you should be able to see Cengage. I'm going to move to problem 311B, because that's where we should be. And in problem 311B, what we're going to be doing is completing a tax return for the employer's quarterly federal taxes. These federal taxes are going to be the taxes that we've withheld from our employees, as well as what we have paid as an employer or what we owe to the government. We'll fill out one of these forms to determine exactly how much we owe and what we should deposit or write a check for. So in this problem, we're going to be the Gallagher Company, and we've gathered information needed to complete Form 941 for the quarter ended September 30th, 2000 whatever. So we're doing this for the third quarter, which is the quarter that's going to end on September 30th. Using the information presented below, we're going to complete part 1 of Form 941, rounding to the nearest cent. They've told us that the number of employees for the pay period that included September was 15 employees. So we had 15 employees that were working for us for this particular quarter. The wages paid during the third quarter are this amount right here. That would come from our payroll register, which is really what we were doing in the problems that we just completed in Excel. We were completing part of the payroll register to show what taxes were withheld. In this case, they just told you what the total wages were. And also they've told you what the federal income tax is for the third quarter, and the Social Security and Medicare wages, which is your FICA taxes for the third quarter. And they've also told you what they are going to pay to the government for those taxes. They're going to turn over the taxes that they've collected from their employees and the amount of taxes that they, as the employer, has to pay. So notice on here, they've got something about federal income taxes. We really haven't talked about federal income taxes in this chapter much. We will get to that in an upcoming chapter. But unfortunately, when you're filing Form 941 with the IRS, you have to know what the federal income taxes are. So that's going to be given to you in this problem. So they're wanting you to complete a part of the 941 form. They want you to complete part 1 of this. And so I'm going to get you started with this. First of all, notice they filled in some information for you. You'd have to know what your employer identification number is. You would need to know who was filling out the form and what the trade name of the company is. All this has been given to you in this particular problem. What they did not give you is a drop-down fill-in blank that you need to show what you're reporting this quarter for. So in other words, what they wanted here is to show that you are filling this in for the quarter ended September 30th. So right here, the best answer is the quarter ended in September, which would be for the months of July, August, and September. In part 1, they're asking you what the number of employees were who received wages and tips or other compensation for the pay period, including June, which was part of the second quarter, September, and December. Well, this is just for the quarter ended in September. So the only thing we know to put in is what they've given us. The wages that we paid during the third quarter, and since this is being filled out for the third quarter, is going to be $10,195. That's the wages. But in part one, all they're asking for is the number of employees. So back to the instructions, the number of employees is 15 employees. So I'm going to put 15 in here for the number of employees. On line 2, they want the wages, tips, and other compensation that you paid to all of your employees for that period of time, which is $89,352.18. $89,352.18 was given to you. That's what I'm going to put here. And line 3, they want the federal income tax withheld, and that too was given. So you're just plugging in the given amounts. The federal income tax withheld was $10,195. Just write in what they gave you, because we don't know how to calculate that yet, but we will learn how to calculate it in an upcoming chapter. Then we're going to drop down to line 4. And it says on line 4, if no wages, tips, and other compensation are subject to Social Security or Medicare tax, you check there and go on to line 6. We're not going to check this because all of this is subject to, or all of our wages were subject to Social Security taxes and HI taxes. So we're going to move on to line 5A. 5A is asking for taxable Social Security wages. Since it didn't tell us otherwise, all of our wages paid were subject to the taxes for OASDI. That would be $89,352.18. That's going to be put in column 1. Then we're going to multiply that by twice the 6.2% rate, because we were both the employer, we withheld employees' taxes, and we're also the employer. We have to match the employees' taxes. So notice that they're using 12.4% there. And so you're simply going to multiply $89,352.18 times 0.124. Do what the form tells you. And that's going to give you $11,079.67. And check your work to make sure that your math is correct there. So notice that when I put that in, this is the correct amount. So this was given times this is how you get column 2. In this problem, there was nothing in the additional information that mentioned anything about sick leave wages or family leave wages. So we're going to move to 5B. We want to find the taxable Social Security tips. And There were no tips that were given, so you really don't need that there either. But so we'll move to 5C, taxable Medicare wages and tips. This is your HI portion. Notice that was your Social Security portion up here. Now we're doing HI right here. All of the wages are subject to HI tax, $89,352.18 are going to be subject to the tax. We're going to multiply it by twice the 1.45% because we're both the employee and the employer here. We're filling out the tax form that we're going to turn over to the government. We're going to show the amount of taxes that we took out for our employees as well as for the employer portion. And so you're going to multiply the 89,352.18 by 0.029%, and that will give you $2591.21. And that's a rounded amount that I got in my calculator. I'm going to check the work just to make sure that I've multiplied correctly, and I did. So this times this is this. Taxable wages and tips, we didn't have any tips, subject to additional Medicare tax withholding. Nothing was above the 200,000, in other words. So we don't have to record that amount. But what we do have to record is the total Social Security and Medicare taxes. We're going to add column 2, lines 5A, and the only thing else we filled in was 5C. We're going to combine the two of those together. So $11,079.67 plus $2,591.21 will give you the total amount of taxes that were withheld, $13,670.88. I'm going to check my work just to make sure my math is right. And what we did is we added column 2, add these two together, and that will give you this amount here. We don't know anything about section 3121, notice and demand, tax due on unreported tips. We didn't have any taxes at all. So the total taxes before the adjustments are going to be, you're just going to bring this down as it is, add lines 5E and 5F together, and that, since there's 0 on that one line, is $13,670.88. Oh, excuse me, I just added line 5E and F, but notice it says to include lines 3 in there. So that's why that's wrong. Line 3 was for your federal income tax. I just had the Social Security portion of that. So it's not 13,000, that's Social Security and Medicare tax. We got to go back and add the federal income tax to that. It's a good thing I checked that, isn't it? So the total amount here is $23,865 $2,258.88. Let me check my work again just to make sure my math is correct. It's always a good idea to do that. And it is. So you add lines 3 and 5E and 5F together, and that will give you the total taxes before adjustments. Now let me talk to you for just a second about this current quarter's adjustment for fractions of cents. You might remember that we talked about there could be some rounding errors due to the withholding of the taxes. And if there are rounding errors, there are going to be some fractions of cents. In this problem, the only way we can determine what that adjustment for fractions of cents is we have to know exactly what the deposit is. In other words, you fill out line 6 of this form, and then you've got to go to another portion of the form to fill it out before you can determine what the total tax deposits are. Note right here in the instructions, they tell you what to do for line 7. Here's the hint for line 7 instructions. You fill in form 941 through line 6 is what we just did. Then you fill in part 2. In this problem, unfortunately, they don't give you a part 2, line 16 of Schedule B. You don't have a Schedule B to look at. But in the real world, you would fill out the form to line 6, then you would go and fill in part 2, line 16 of Schedule B. And whatever's on that Schedule B that you completed, you're going to take the information and fill it in on line 10. Then it tells you, note that lines 6 and 10 must equal. If the amounts are not the same, you're going to correct the amount by entering the amount to equal on line 7. Line 7 differences are caused by how calculations are made on Form 941 and the amounts that are withheld from the employee's earnings plus the employer's payroll tax amounts each pay. It amounts to a rounding error, in other words. So what we're going to do is we're going to go straight to line 10 and fill it in first, because we don't have that second schedule, Schedule B, that they want you to complete. So we're going to go to line 10 and see what the total taxes are after the combination of adjustments. And the only way we can do this is they'd have to give it to us. And the total tax deposits are that amount that goes on line 10. So $23,865.92 has to be plugged in to line 10. 23,866, and again, we're copying that amount technically from here into the form, 23,865.92. That was a given amount that I put in there for line 10. Notice it does not equal what we have on line 6. So we have to adjust this to make it balance. In other words, we're going to force it to balance. And the way we're going to do that is we're going to take line 10's amount, 23,865.92, and we're going to subtract line 6 from that, 23,865.88. The amount is 0.04. In other words, there's 4 cents between these two figures here, and that's an adjustment that we have to make for fractions of cents. And it's because of the rounding errors that we've got. So we fill out line 7 by taking the difference between line 10 and line 6. That gives us 4 cents as our fraction of cents. We didn't have any sick pay. You don't worry about that. You don't worry about the quarters adjustments for tips or group life insurance because they didn't tell us anything about that. So I'm going to check my work just to make sure that my math is correct for those fraction of cents, and you see that they are. So if line 10 is correct, I go to line 11 and read it. It doesn't say anything about being a small business. We didn't have any sick pay or family wages. We didn't have any non-refundable portion from worksheet 1. So you go on with part 1 and you would fill out line 11D, non-refundable credits. I don't know anything about that. They didn't give us any of that information. There were no total taxes after adjustments and non-refundable credits. And they're telling you to subtract 11D from line 10. There was nothing in 11D. Line 10 is this. So we're just going to bring that down here. In line 12. So $23,865.92 would go in line 12. In line 13, the total deposits for this quarter. The total deposits for this quarter were given. The total deposits were $23,865.92. We don't know anything about any deferred amount. They didn't tell us any of that. There's no sick leave and family leave. There's none of that to deal with. The total deposits, we're going to add lines 13A, and the rest of those were 0. So the total deposits is $23,865.92. There were no advances. The total deposits, again, you're subtracting 13F from 13E. Since there was nothing in 13F, just bring them out down again, 23,865.92. There's no balance due. There's no overpayment. And that's all that we would put down there. I'm going to check my work one more time just to make sure I put in the correct figures here, just to check your work. And that's all you have to do on this form. So mainly read your instructions on this. Put in what they tell you that they give you. That's the only way you can do this, to calculate what goes on this form 941. And the rest of this chapter, we're going to be doing these 941 quarterly deposits, quarterly returns, as well as some deposits too, in the remaining part of this chapter. So I'm going to stop here today, and we'll see you next time. Bye-bye.